The Technical Lab by BluSky TV. This is Coach Matt. I'm excited to be here with the team to kind of break down a little bit of the market action. And every single week in the Technical Lab, I like to talk about something relevant to the market and obviously look at it from a technical perspective. And with the central bank last yesterday, I kind of feel like that was the very important point to really kind of talk about here today was the central bank from yesterday and how we traders can understand that environment so that we can do our best to position ourselves to take advantage of that market as well. So yesterday we had some major news coming out to the market. Obviously, everybody and their dog knows exactly what was transpiring yesterday with the central bank. So I want to first start with kind of the pricing power of the central bank and what really kind of happens here. So the first thing I want to talk about is kind of what happens during the Fed announcements, how the market responds to that, and what key indicators can we look at to help us understand the next direction of the market. And so, first and foremost, let's just understand the environment from yesterday. Yesterday, the central bank announced monetary policy, and in doing so, they maintained monetary policy. But in maintaining monetary policy, you saw an immediate response by the market. And so, whenever you deal with the Fed, and you deal with the Fed from a day trading perspective, the first thing that happens, because this is an event, it is not a singular report. I talk about this all the time. When we get a labor market report, when we get inflationary reports, when we get consumer data or retail data or whatever the case might be, the number comes out. If it beats the expectation, market prices it in. If it misses against expectation, market prices it in. And then we move forward. We might talk about those important inflationary reports. We might talk about the labor environment because they're fascinating conversations and they're important to understand. But from a market perspective, they price it in, they move to the next data point. They price it in, they move to the next data point. The event comes out, prices in, market moves on. That's not the case on the central bank. In fact, there's three really important parts to understand in the pricing power of the central bank. The first thing that we see occur, and let's go to the ES to just kind of show how the market responds yesterday. The first thing we typically see is we see the Fed post the policy statement itself. And that is not a trading environment for you. It's not a trading environment for me. Who is it a trading environment for? It's a trading environment for algorithms, because what happens is, and you can even go down into the lowest time frame here, and you can kind of see the pricing yesterday on the Fed. So the policy statement comes out, and within a fraction of 1 second, here's the policy statement right here. And within a fraction of 1 second, the market starts going down. Now, is that because everybody had a chance to review the policy statement, think about the policy statement, have context for the policy statement, ask any questions about the policy statement, hell, even make any statements themselves about the policy statement? The answer's a no. There's not a thought that goes into this. The policy statement, this is how it works. The policy statement itself simply goes into the algorithms, and if there's an expectation on higher interest rates, the market's going to price that down. And if there's an expectation of lower interest rates, the market's going to go up and they're going to price that in. But that's just based on what we know from a interest rate perspective. And so what the Fed announced yesterday is they're going to pause on the interest rate this meeting. They maintain the monetary policy at 3.5 to 3.75, but in the SCP and the dot plot, there was a suggestion that we're going to see 2 to 3 interest rate hikes by the end of the year. Whereas before the Fed sent that policy statement into the market, there was an expectation of 1 interest rate hike. And so now the market is expecting 2 to 3 interest rate hikes. And you might see the impact on the ES, on the NQ, what you're personally looking at the time, what you're personally trading at the time. But the real impact and the catalyst that handles all of this is not the market itself. It is actually the dollar. And so as you can see what happens on the dollar here, over here on the right-hand side of the chart here, this is the dollar index. And when that interest rate, when that expectation is we're going to see higher for longer, we're going to see additional interest rate hikes, the dollar has a direct impact. See, the stock market itself, the things that we trade, the stock market has what's called an indirect impact. It's not a one-to-one event. There's an interpretation of how that environment from a monetary perspective will impact stocks. There's a discussion, there's a debate, there's interpretation, but it's not a direct impact. And I have a vastly different interpretation of the Fed yesterday than the general market does, I can tell you that. But when you're talking about the currency itself, when you're talking about the bond market itself, it's not an indirect impact. There is a direct impact to not only the currency in the bond, but how people get paid in currency and in the bond market. So if the interest rate is going to go up and stay higher for longer with the anticipation of further rate hikes, the dollar has to price that in. There's a direct impact there because of the carry trade. The carry trade, for those of you that might not know what the carry trade is, it is the number one trade in the world because it's the currency market, and the currency market is by far the largest market in the world. And so when you're dealing with the currency market, the carry trade is the difference between one currency's interest rate and the other currency's interest rate. And so if the Fed tells the currency market, you're going to get paid more money on the dollar and you're going to get paid more money on the dollar over time, the dollar's going to have that direct impact. The bond market has that direct impact. The stock market has an indirect impact. But in the immediacy of the event, everything gets correlated to one. Everything gets divergent to one because the epicenter is the dollar and there hasn't been an interpretation yet. And so you see the dollar up, and as the dollar goes up in its first move, the ES went down in its first move. A one-to-one correlation there, obviously on the divergence side of the equation. As the ES started doing its first retracement, the dollar did its first retracement. As the dollar started picking back up, the ES started picking back down until we started getting into power hour and you started seeing it interpreted a little bit differently. Because after the immediacy of the pricing of the event, everybody in the stock market starts answering and asking questions like we see in the press conference, which is phase two of the trading environment of the Fed day, is the Q&A portion. Now, in my estimation, I find it to be impossible to trade with the algorithms. Now, you could have looked at the market today, looking back yesterday, and said, oh, but man, that was a straight downward pressure. You could have shorted that. And I would have said, yeah, you could have if you were in the market, had orders all ready to go before the event transpired itself. But then again, you don't know what direction is. And I can tell you a lot of times you'll see a little bit of pump up, a little bit of pump down, shake everybody out. Everybody gets frustrated and then they see that larger move. And so what I typically recommend is between the policy statement itself and the press conference, that's a no trade environment, in my opinion, because you got to think about who your competition is. Your competition in the market at that point is algorithms who don't have your context, don't have your emotion. They don't care one way or the other anything about the environment. They're simply pricing in the fundamental expectation that the Fed just gave the market. There's no emotional context there. You might have some, market could care less. It's a very, very difficult environment to trade in my opinion. Yesterday, saw a little bit of that aggressive move to the downside. Then you saw a lot of chop. Now, in the press conference itself is usually where you start to see a trend develop in post Fed. Now, the press conference happens 30 minutes after the actual policy statement, and that's right here. This little move right here, all the way up until, let's get the environment here correct. So there's the policy statement, and right here, this chop, this up, this down, this nothing, that is all the press conference. And in the press conference is when you usually pick a direction. Now, yesterday was a little bit abnormal, in my opinion, because yesterday was Kevin Warsh's first day. And unlike Jay Powell, who we knew what he was going to eat in the morning, we knew what type of underwear he was going to wear on Fed Day, we knew what tie he was going to wear, we knew what shoes he was going to wear, we knew his general demeanor and what he was going to tell us before he ever even started speaking. Yesterday, we didn't know a stinking thing about Kevin Warsh. We know what he was back in the day of the Fed. We don't know what he was here this time. And on the first Fed day, you typically see a little bit more of a hawkish lean in the marketplace. And the reason you do that is because the Fed's going to make changes. And that there was some big time changes yesterday on Fed day. Number one is you had the policy statement get cut in 2/3. And so there was about 350 words in the previous policy statement. There was about 130 words in yesterday's policy statement. And so they're going to a very thin policy statement, leaves more to interpretation. And what they did was they removed guidance from the equation. And I feel that's a very, very important thing to understand. There's a big debate on what that means. I'm going to talk about that here in a second. And so yesterday we saw a little bit more chop than we usually do during the press conference, because again, like, we usually get a pretty good understanding after Jay Powell would get the first or the second question done. All of a sudden, we're like, yeah, we know where Jay Powell's at. We know where his head's at. Well, we don't need to listen to the next 25 minutes of the press conference because we know exactly where Jay Powell's head at. That's not the case yesterday. The market's getting to know Kevin Warsh, and Kevin Warsh made some statements that created some uncertainty in the environment that took some degree of interpretation, and that's the removal of guidance. And I want to talk about that very quickly, because guidance is the forward thinking mechanic of the central bank, but guidance is not a just a rare thing when it comes to the central bank. A lot of the market behaves based on guidance. For example, when you have a company that has an earnings report and they have typical forward guidance in that earnings report, the forward guidance is the most important part of that entire equation. And when you remove guidance, when a company says, nope, we usually produce guidance, but now we're not going to produce guidance, you typically get a really negative reaction in the market, because the removal of guidance is usually a negative sign. Because think about it like this. If a politician has something negative to say, they're dealing with something negative, whether it's a controversy or some negative factor, they usually don't scream it at the top of Mount Olympus on a Monday morning. They usually do a data dump on a Friday night so nobody sees it. And when a company reduces guidance, the market usually sees that as a negative thing. Oh, if it was positive, you'd be screaming it at the top of Mount Olympus. And now you're saying you're not even going to tell us what that is. Oh, that can't be good. And so whenever you remove guidance, it is seen as a negative thing. And when that question occurred in the press conference, you had a very negative response to it, because that was the market saying, oh, you removed guidance and we're not understanding why you removed guidance. And that's where the interpretation came in. And so you had a lot of chop yesterday until we started understanding the guidance equation. And then there was a little bit of rip your face off downward pressure and price to kind of confirm the closing session, as we saw that close yesterday, was that removal of the guidance. Here's where I personally believe. So the first phase is the policy statement. The second phase is the press conference. The third phase is the overnight session. And that's after we've had a moment to digest the information. Now, when you're dealing with the pricing of the market's going to start separating from the dollar to a certain extent. One thing before I get into the overnight session, one aspect of the market that will not separate against the dollar is gold. Gold will not separate against the dollar because, again, there's a direct impact here. 90% of gold is financed and priced in dollars. When you see the dollar go up, gold goes down. And so, as you see that first response in the market yesterday, let's get off that 1 minute chart here. You see that first response in the market yesterday, straight down on gold, first retracement, sell off coming into the close. Dollar up, first retracement, dollar up going into the close. That was very similar for gold. That was very similar for the ES itself. But when you start going through the interpretation, that next stage, after we've had a little bit of time to digest it, the question of guidance starts getting answered a little bit. In my opinion, one of the reasons why the market's doing fairly decent today and gold is doing terrible today is because of that interpretation of guidance. The market's initial read was coming out of the Fed. The labor market's fantastic. The economy's fantastic, but we have some slight concern about inflation. That was the general interpretation coming out of the Fed. After you have a little bit of time to digest, this is my opinion, and it's just straight my speculation, my opinion based on my read of how central banks talk to the market and the interpretation of such, and my read on Kevin Warsh. Kevin Warsh was the only person to not produce guidance yesterday. Every other Fed official produced guidance except Kevin Warsh. And there's a scenario where I believe Kevin Warsh is buying a little bit of time here. And that scenario is very, very specifically regarding crude oil. When you look at the inflationary side of the equation, let's go to Forex Factor here, and I'll teach you some fundamental stuff here. When you look at the inflationary side of the equation, oh, come on, Forex Factory. There we go. And let's look at the inflation here. So the reason we're concerned about inflation right now in the market is because you have a growing expectation that the CPI reports, and let's just look at it today. Over the last 3 months, we've seen sizable shifts in the CPI report. We see that CPI report going up, 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 up. Now, there are two versions of the CPI report that are important to understand. This is the number one inflationary report for the market. You have the core CPI report and you have non-core inflation. When you deal with core, core does not have food and energy in them. The two biggest drivers of inflation right now are food and energy. Energy, when you look at the PPI report, the CPI report, the all this upward movement in price we've seen in the CPI report over the course of the last little bit, not in core. In core, you don't see that kind of flatline here month over month. But when you look at the non-core side of the equation, you see this big upward movement in price on the year over year. On core, you see a little bit of an upward movement in price on the year over year number. That is the difference in the inflationary situation, which means 80% of all the impact of inflation over the last 3 months is due to the Straits of Hormuz being shut down and the energy crisis on the supply chain and the downstream impact that energy has on absolutely everything else from an inflationary perspective. So I feel like the market got the interpretation of the removal of guidance wrong. I feel like we're still trying to interpret who Kevin Warsh is, number one, but I feel like the interpretation of the removal of guidance the market saw it as a net negative in the ultimate short term. But as they had a moment to digest that information, there's a scenario where we do not get 2 to 3 interest rate hikes by the end of the year, team. In fact, there is a wide expectation that over the next 4 to 6 weeks, we're going to see a reduction of about 7 to 10% in gasoline. Over the last month, with where crude oil is right now, you're seeing a 30% reduction in crude oil over the last month. Over the next month, you expect to see a reduction of 7 to 10% in gasoline prices across the board. As that comes down, inflation comes down. And I believe that Kevin Warsh is buying a little bit of time here to see how that deal with the Straits of Hormuz opening up due to the MOU that was signed yesterday between Iran and the United States, how that oil pressure coming down, the gasoline pressure coming down, the downstream impact of inflation coming down slightly. Because if we come back down to 2.9%, team, you're not getting interest rate hikes by the end of the year, and you'll have a pivot in the Fed analysis going into 6 weeks from now. And so the secondary interpretation was very important here because you started seeing something very important transpire. When you look at the ES is now separated from what is the impact on the dollar, and you're starting to see a secondary reaction here. And so that secondary reaction, and Mary was talking about this yesterday when we were kind of talking during power hour, and all this chop and all this down. And again, you look historically, you're like, oh, that should have just shorted there. As this was a very sensitive environment all day long yesterday. And when you're dealing with the third phase of Fed Day, it's the moment where everything gets easier. And that does not happen when you're talking about the market trying to price in the interpretation of a new Fed. And I don't believe it's going to be as choppy next time, because I do believe some of the chop yesterday was the interpretation of who this individual is running the most powerful institution in the history of the world, the United States Central Bank, which controls the number one currency in the history of mankind, the United States dollar, which is backed by the number one military in the history of mankind, the United States military. Once that occurs, everything starts to get once that settles in, everything starts to get a little bit more easy as volatility declines. And as you see with the futures reopen here, team, this is not abnormal, by the way. This is why Mary said yesterday she was looking forward to the overnight session. This is why I said yesterday I'm looking forward to the overnight session, because once the futures market opens back up, you have less interpretation, less volatility, less of everything. And what you saw transpire yesterday on the futures reopen was a break back up after a reversal, and then secondary patterns, a high base, 9 EMA catches up, breakout, overextended, snap back to the 9 EMA, confirm, breakout, get up into the overhead resistance, flatline. You see a much, much, much more healthy and a much, much, much more consistent environment. And so next Fed Day, team, don't try to be too aggressive during the immediacy of the policy statement, because that's not for you. It's not even designed for you. Nobody is even thinking about you. It's about the algorithms and how the algorithms price in the future expectation of rate hikes or rate cuts. As we get into the press conference, yesterday we saw chop. Next time we'll see chop. Remember that, because you're not going to get an ultimately clean environment on the press conference. You can catch some moves on the press conference, and I do not expect as much chop next time as we certainly did have this time. But where does the consistency come in? Where does it get easier on Fed Day? Where do you not have to fight volatility, but you can just go with patterns and trends, and you can trust patterns and trends? You can trust stop losses. It's usually as the market reopens up after a couple hours of, now we understand the Fed, we can get right back up into our normal our normal pricing, our normal expectations, our normal trend environments, our normal levels. For example, you see this kind of over here, this chop, 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 chop over here, fighting the exact same level, guys. Over here, chop, 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 chop. Over here, nothing but a slowing momentum high base with a beautiful breakout. And so the overnight session on Fed Day can be a much, much more consistent pricing event. And you don't have to fight as much interpretation and you don't have to fight as much volatility. The last point, when you're talking about the correlation versus divergence of the market, coming back out to the dollar, one thing to keep an eye on in all of this is if the dollar stays above 100 here, team, the biggest areas of the market that a higher for longer will impact is on the cyclical side and on the defensive side. But one area of the market that does not get caught up in as much of a sensitive interest rate conversation is technology. And so when you're looking at, for example, XLK, which represents the technology space itself, and you look at the daily chart here, team, the only thing that occurred yesterday was a flag-based pattern to the rising 9 EMA on the daily chart with confirmation today. That is the only thing you saw transpire yesterday in the technology space was nothing but a snapback flag to the 9 EMA with now confirmation on the pivot. That's the only thing that occurred in technology, because technology, as represented through the NASDAQ, obviously, technology does not get caught up in the overall interest rate conversation. And so that's another thing to keep an eye on. In the immediacy of the Fed announcement, team, everything has a correlation status of 1-to-1. The very second that overnight session happens, you start to see the market start to move outside of that 1-to-1 status. And with the expectation of a higher for longer, the one area of the market that truly does not care about interest rates is the Mag 7. When you're talking about Nvidia and Apple and Google and Microsoft, these Amazon, these types of companies, they don't a 0.5% adjustment on monetary policy is not going to stop them from doing the things they need to do. It's not going to impact their downstream. It's not going to impact their overall earnings environment. And so you get a little bit of in a higher for longer situation if that does start playing out. And you can see that on the weekly chart on the dollar. This is a major, major breakout. Don't get me wrong. I want to see this thing get faked out. I want to see a leg in the market. I want to see gold double bottom. I want to see it get stable. And if the market's going to find stabilization, and if we're going to see a little bit of a trend develop, this dollar cannot stay above 150 cents, because that is a major, major level of resistance. And that would signify a little bit of an upward movement of price to the 102 level. And I can tell you, I don't care about what market you're looking at. If the dollar goes to 102, gold's going to go down further, and the ES is not going to break out of those all-time highs. And so that's just something to keep an eye on. The dollar is the anchor during Fed Day. Everything else is a secondary interpretation. And after we've seen that secondary interpretation, where's the healthiest areas of the market? The healthiest areas of the market post Fed. And I know this isn't necessarily a day trading conversation. It's more about understanding the market itself. It's more about the top-down approach to the market, which can help you understand the day trading side of the equation. But when you look at the overall marketplace post Fed, where's money flowing in? Where's money flowing out? Where is the easier situations? Where's the more difficult situations? The number one sector post Fed is technology. It is the number one sector in the market. It's the number one sector by a country mile in the market, although there's two sectors closing very, very fast on that quality of that move. The number two sector, I would say, that is looking fairly decent post-Fed would be the industrial space. The industrial space just went through a beautiful multiple time frame breakout this week, a little bit of a cup and handle. You see that breaking out. And even post Fed, we haven't really seen downward pressure on price. I do think a flag would be beautiful here. Industrial looks pretty good post Fed as well. The third sector I would say that looks really good post Fed is a pullback in finance. I wouldn't want to touch anything on this candle, but a pullback in finance to the 53 level would be very, very, very good. Now, a couple sectors that are just not very good post Fed here. I think the number one sector that I just don't have a good read on right now, I've been saying it's a stay away from a little bit of time, is the communication space. The communication space is a dog of a dog of a dog right now. And I would say that is a continuation situation post Fed. And so it's quite amazing to see communications, an aggressive sector, separate so much from the Nasdaq in general and technology in general, but the communication space is just not getting any quality pricing here. And it's not today, it's not yesterday, it's been a while, but yesterday compounded that situation in communications. I would also say energy is in one of those situations where, because of the Straits of Hormuz and because of the expectation of decreasing price in crude oil and the lag impact that will have in energy, I also have energy as a stay away right now until we get down to the 200-day moving average. And so I just wanted to add a couple thoughts as I'm looking post Fed. How is the market pricing everything in? Mary, I just think it's important, like post Fed, to understand the complete picture. You know what I mean? I think sometimes we can get so caught up in the intraday move that we miss the forest through the trees. That we get so caught up on that 1 minute, 2 minute, 5 minute time frame, and then we get chopped up and we get stopped out, and we're like, "Oh, the market just sucks." No, you're trading in a terrible environment. That's what's happening. It's not that the market sucks. It's that the market is trying to price in things, and you have a strong opinion when the market's trying to not have a strong opinion. And so I think it's very important post Fed to not just live on that 5 minute chart, that 2 minute chart, to have an understanding of the context of the bigger picture horizon as well, because it's the success of your day trading has a lot to do with the success of the overall market itself and the consistency of the market itself. And as a trader who just doesn't just day trade, I'd like to be very, very thorough in the conversations I have on the Fed, and specifically in regards to the Fed, because the Fed drives price action. There's such an important factor in the confidence we have as a trader itself. So, for example, I'll just give you an example of that. Post Fed, I'm much more willing to trade the Nasdaq today than I am the ES today. Post Fed, I feel like the technology space is a little bit easier than, say, the entire market itself, which is seeing separation today. One of the things that you're seeing, and again, the context. I'm a guy that believes context is king, queen, and country. Context is everything. Other people don't care about context. But one of the reasons why we're dealing with chop in the market today is the market is pricing in different sectors based on the new economic conditions and the new economic environment. And so when you're talking about post Fed, here's the sectors that are going up, here's the sectors that are going down. That's going to create a little bit of chop on the ES, which reflects all of it. Whereas when you're looking at the NQ here today, the NQ you see is kind of a trending environment a little bit. Don't get me wrong, there's still chop here, but the chop is getting higher and higher, whereas the ES chop is going neutral. Why is that the case? Why is the NASDAQ separating from the ES today when the ES is a mini NASDAQ? Because the ES is pricing in different sector expectations today, whereas the NASDAQ doesn't really care about the overall interest rate environment. It creates a cleaner environment on the trading side of the equation there. And And so I just think it's very important to be thorough when you're having these discussions about the Fed, because most of the time when I see people talking about the Fed, I I just have a tendency to believe most of their interpretations are wrong, and I truly do believe the market got some things wrong yesterday. And the number one thing I think the market got wrong was the removal of guidance. I think I honestly believe Kevin Warsh is buying time to, number one, kind of do his thorough review of all things Fed and all things central bank, as he announced 5 task forces to basically review all the processes, such as reviewing how economic reports exist, for example. Most of our economic reports are based on survey data. That survey data was based on the 1980s and the 1990s. We live in the age of AI. I think we can update the way we do survey data, especially with kind of the survey data over the last 4 to 5 years being absolutely unreliable. We've all seen when the labor market reports, labor market numbers on the first Friday of the month, those get revised all the time downstream, because the survey data is just not a very compelling way to look at the actual health of the labor market environment. And so one of the things that Kevin Warsh is attempting to do is to get the market to rely more on the interpretation of economic data and less on the Fed itself. They're trying to put less reliance on the Fed. That's why you saw 130 words in the policy statement and not 380. That's why you saw a little bit of the removal of guidance, because they're trying to get to the point where the market is now pricing in economic factors and not central bank factors. Now, that's something I do support in terms of updating our economic reporting system, because it's outdated, it's flawed, and it's vastly inaccurate, quite frankly. And so I do support that, but it's going to be a minute or two before we get there. But that's what he's trying to do on that side of the equation: put less reliability on the central bank, more reliability on the market interpreting economic factors. Because the market has not been a healthy understanding of what's actually happening in the economy since 2010, after the injection of quantitative easing, and we changed our monetary cycle, and the market became a bunch of drug addicts when it came to monetary policy. Well, Kevin Warsh is trying to slowly but surely get the market to be less reliant on monetary policy, more reliant on economic and fiscal policy. Good luck with that one. The central bank plays a large role. I don't think he's going to get there completely, but I do support the market or the Fed trying to get more reliability in the economic factors. Now, let's take a look at the Ace here. How much could he do in one term? Oh. It's hard to change the stripes of the Fed, Ace, because even though Cameron Warsh is his own man, he's gonna put his stamp on the Fed. That's such a good question, by the way. He's gonna put his stamp on the Fed. And again, it's like any CEO that comes in new to another company. They're gonna put their stamp on that company. They're gonna review the processes, they're gonna make recommendations, they're gonna make changes. But we're also talking about a vastly, vastly large institution that also has bosses to it. And so the central bank doesn't have a boss in terms of the United States, but the central bank does report to the Bank of International Settlements. And so how much change can he foster in one term? I think you can make sizable changes, but I don't think you're going to change the overall stripes of the central bank. And I certainly don't believe you're going to get the market to be less reliant on quantitative easing. I think that ship left the station a long time ago. You're not going to get the market to not focus on the M2 rate. You're not going to get the market to not focus on stimulus. Those things have been indoctrinated into the market for 16 years now. That's not going to change in the short term. Can he get to the point where we have greater confidence on the economic reporting structure? I It's such a tough one to project out, because our economic reporting structure is taken on political leanings these days. For example, when you look at consumer confidence report today and you break it down from a political perspective, 90% of Democrats say the environment is terrible, and 90% of Republicans say the environment is fantastic. And so how do you work through that bias from what is true on the consumer side of the equation? By the way, when Biden was president, the numbers were completely opposite. They're full of bias. And so can you get to the point where we have reliability on labor market reports, which is a gig economy going into the AI world where automation will replace jobs? Can you get to the point where you have confidence in the consumer confidence reporting numbers? Paint me skeptical. Paint me skeptical. I support it. I support it because the economic reporting system is. I don't want to be too aggressive in just saying it's just a flawed system, because the U.S. economic reporting system is still the shining light to the rest of the world from an economic reporting system. But there's a lot of flaws in it, and at the end of the day, I think it's like when a president comes in and they're, making all these campaign promises, and they're saying, "Wow, we're gonna do this on day one, day one, day one, day one," and then they figure out the federal bureaucracy is kind of difficult to move. Yeah, that's kind of like it is at the central bank as well. Yes, that's a great way to put it. They are the cleanest shirt at in the dirty laundry. Yeah, yeah, yeah. That is a good way to put it. But it is something I do support. I think we all want accuracy in economic numbers. I think we all want to be able to have confidence in projecting where the economy is going. That gives us great confidence in our technical read. That gives us greater confidence in projecting out not just 3 minutes in the market, but 3 weeks in the market, 3 months in the market, 3 years in the market type thing. Whereas when you don't have clean economic environments that are subject to a lot of interpretation and a lot of speculation and a lot of opinion, it's a little bit harder to project out that long. And so it's something I do support, but it's also going to be very difficult to actually get there. Um, but if anybody can do it, it is the central bank. So let's see if they can do it. Let's give them the latitude and the leeway they need. But again, I do find it debatable. What I don't find debatable is the outperformance of the NQ against the ES. And that's kind of the last thing I want to do here today is just take a look at where we sit going into the weekend here, team. On a multiple time frame type situation within a reading of the market itself. We're going to end the weekend with the dollar breaking out of a multiple time frame level of resistance. As long as the dollar is above resistance here, guys, technologies, it's a different beast, says general market conversation. Technology doesn't care about the dollar going up. Technology doesn't care about interest rates going up. Technology doesn't care about that. Technology is a growth juggernaut. That's what it is. Everything else in the market, they care. Semiconductors, technology as a whole, Max 7 generally, they are less impactful when it comes to the central bank. But with the dollar, you just gotta, as long as this dollar's breaking out, you gotta feel like the general market has some degree of cap on it, I would say. If the dollar fakes out here, my goodness, that could be powerful for the market, guys. And so that's just something to keep an eye on right now, because we are breaking out today. We are breaking out this week. But if the dollar fakes out, you could see a scenario where we get a little bit of more love in the S&P and certainly in the broad market itself. So that's just something to keep an eye on. I'm a little bit cautious looking out further down the road as the dollar is breaking out here, because the dollar can put pain on the market, guys. It certainly can. Go look at gold today. The dollar can put pain on other asset classes. That's a great question. Do you fade the Russell long the Q? If the path of policy is accurate, Ace, 2 to 3 hikes by the end of the year, Russell will underperform the general market because the Russell is sensitive to the interest rate conversation. And so if you believe in the path of policy as we do see it right now, I'm skeptical on it because I believe there if inflation does come down, and it's an if A then B, obviously inflation's a lagging, sticky conversation. But let's say gasoline does come down 7 to 10% over the next 4 to 6 weeks. We've already seen crude oil come down. You could see the year over year numbers on the CPI report legitimately come into 3.9% next month versus 4.2% this month. If that occurs, you're not getting 3 hikes. You might not even get 2 hikes at that point, maybe one. And so I do think there's some speculation on that. But let's hypothetically say the dot plot and the path of policy is legit to where by December of this year, we're going to see 2 to 3 hikes. There's no way the Russell outperforms the ES. There's no way the Russell outperforms the NASDAQ. There's no way the Russell outperforms anything because the Russell 2000, out of every aspect of the market, the Russell 2000 is very sensitive on interest rates because these companies have an impact on their bottom line with the interest rate conversation. Apple, Nvidia, Google, Microsoft, these juggernauts out there. 3754, 425 doesn't play a role. 375 to 425 on an interest rate on a company that needs to finance their future growth through utilizing debt, which a lot of Russell 2000 companies do, you would see underperformance there. And so is there a pairs trade here? I think is your question, right? Do you long the Qs, short Russell type thing? I could be convinced on that if you believe in that path of policy. I kind of feel like I'm standing on an island right now telling the market they are wrong in their interpretation of Kevin Warsh yesterday because we haven't seen that get reflected yet because obviously inflation's still high. But my read is this, guys, and I could be wrong, but I'll just give you my read. Jay Powell was extremely data driven. And I think the market right now is still being extremely data driven. What that means is the Fed's not going to move until the data breaks. Now, that's not what the Fed usually does. That's what the Fed did under Jay Powell. They became very data dependent. And they became that way because of their historical mistake on transitory inflation after the pandemic. And so from 22 to 26, Jay Powell became very hesitant to move. And he became very cautious and very conservative as well. And so he wouldn't move until the data justified it. Well, when you're dealing with inflation and specifically inflation has a lot of variables in the path and it's a lagging impact. And so if you're the central bank and you wait for inflation to break, you're usually on the wrong side of the policy statement. And so, as Jay Powell was during transitory, both in the initial lack of being aggressive in raising rates up and also being a little bit too cautious and conservative when we saw the supply chain truly start to heal up in 23 and 24 and inflation was coming down, he was a little bit too cautious to lessen the restrictive territory of the interest rate. And so he was a little bit too data driven, in my opinion. And I say that as a data driven guy. But if oil comes down due to the Straits of Hormuz opening up, then B, gasoline comes down, then C, other inflationary pressures come down. And if inflation is coming down while labor is stagnating, which I believe labor will stagnate, if not slightly go up on the unemployment report, they're going to be behind on policy statement. And I believe Kevin Warsh knows that. And so I believe he removed guidance to see the next 2 months of data to see if we start to see the early beginning of that curve back down to the downside. Because if we've seen 4.2, if 4.2 is the top side of the CPI report, you're not seeing 3 interest rate hikes. And so I that's why I feel he's kind of doing that. And so I wouldn't support it, Ace. Personally, I wouldn't do a pairs trade there. But if I'm wrong and the path of policy legitimately is 2 to 3 interest rate hikes, yeah, I think you got an edge there. I do. But one way or the other, I do favor technology in the NASDAQ coming out of post-Fed. I do think you're going to see a little bit of a cleaner environment in the NASDAQ going into next week, as you most likely will the ES, which means I do think the NASDAQ is going to be a little bit of a better situation than what we're seeing in the general market itself. Does that make sense, everybody? I know this is a little bit of a different technical conversation here today, but I'm a Fed whisperer, I'm a Fed geek, and Fed monetary policy is very important to me. And so I felt like we could do a general discussion on all things Fed today. I feel like we could and to truly make sure that we understand the pricing power of the Fed as well. With that said, team, I we are going to take a little bit of a break right now, but we will be right back for Power Hour as we dial in the last hour of the trading week here this week. So stick with us and we'll be back for Power Hour. Thanks, team. BluSky TV, this Power Hour, the hour where Coach Becky and Coach Matt rock the markets, talk trading, have a lot of different conversations, quite frankly. I got my good friend, great trading partner, Becky here, Coach Becky, that is. Put some respect on that name.
Oh,
Becky, how you doing, my friend?
I am good. I feel good. I feel good about this power hour. I'm excited to be here with you guys. I loved your technical read today because I need to know so much more about all the things that you cover. Those are newer to me in my view of trading and how I got into it, like for technicals first. And so I'm so thankful for you and all that you say.
You know, you gotta have a friend in your life that speaks the Fed. Like
Yeah.
you just do. You don't have to speak the Fed, but you gotta have a friend in your life that does speak Fed because speaking Fed is kind of you gotta be a little tinfoil hat there, Becky. You gotta be a little crazy. But I enjoy having the conversation. I hope everybody learned a little bit on that. Far more of a fundamental conversation than a technical one, but I think it's important to understand how Fed Day works.
I love it. I think the interplay of those two is so much more powerful for a really holistic view and like better trades and better hold times. And it's great. All right, well, let's see what the market did. Okay, so I streamed this morning session with Justin, and I got a little bit in the weeds with it. You guys, a lot of you were there with me this morning. Justin had some technical issues on his internet side, and so I caught the early short here, and then it was so strong, so aggressive. I tried for the momentum, and then I started getting chopped up because that trade lost, and I tried longs and shorts, and it was a bunch of monkey business. So what we were talking about when we were trading this morning is that VWAP tended to be the rhythm we were saying. So what we were seeing around this time is that we were pushing up. Everything was gliding upward with the market. VWAP is this blue line here. It was holding. Nothing was printing and closing underneath of it. And so the best trades were the longs off of here. I did not engage in this one here. I think just did, I believe. I don't know. I was taking a little break because I took like 4 trades in here, a couple of ESs. So when we were getting towards the end, I tried one more time for a long here and it got stopped out, right? Well, it's like, oh yeah, I took some in profit and then I took a stop out. So what happened, you guys? Oh my heavens. I hope you guys were watching. When we got off, I was just sitting here watching. I was shutting down my things. I was helping some kids run here. And look what it did. It started wicking off of VWAP again. I was like, okay, if ever there was a long, we've been talking all morning about the analysis, about how it was pushing up, about how we were reclaiming the bearish move from Tuesday and Wednesday, and how that was a direction or upper target. So I got in here, I layered in. It was pushing off. I felt really good about the trade because we had talked about it all morning. And so it was more cemented in my mind what was happening. And then I even added the last little bit here. And then I just started scaling as we took out this high. And then we were holding around this orange line is my initial balance high, which is the high of the morning hour range. I was scaling off because I was concerned about hesitation here. And then I wanted to hold to this ultimate target that we spoke about earlier as well of that 750. So what I did was I targeted here and then I targeted the 700 level here. And then I have one contract left that I really wanted to hold for power hour, but I had other things I had to do. So I put my stop right underneath of this bullish candle because I wanted to continue the momentum and that was taken out. So that is how I started my trading day green, and then I turned it red in this monkey business. And then I got it back green by taking the best trade, layering in as I got confirmations, and then layering out as it hit key levels. And that's what I want to talk about. You know, like sometimes we take a lot of trades, but if we can be careful with it. I was trading micros, and so I knew that my risk was within a threshold, even though like the paper cuts were sucking. When I saw the good opportunity, I was careful. I watched it. I pieced it in, and then I locked in some profits, and I trailed my stop. And so I think that that is kind of the way that I like to trade, even though sometimes when I share my screen, I take more trades than I would, I think, otherwise, what my style was when I was private with my trading. So anyhow,
By the way, it's hard not to.
hard not to, right? I feel like an interesting example. This is like a case study in humanity right now, becoming a private retail trader and then doing this live streaming because it's like, how is this going to change things? But it's a growth opportunity. And so I think the big part of this is just keeping the leverage small, right? By trading 2 to 6 micros and then respecting the risk. That's how you can have a little bit of capital left in order to turn potential red day into a green day. So anyways, now where are we at, right? So the 4-hour was giant. Let me go to the bigger charts because I don't see a trade right now that I like. So I'm going to spend a minute on these bigger charts, even though Matt kind of did already.
The only thing I currently see is a potential fade on the
short, right? Yeah.
Yeah.
The reason why I was targeting that 750 was here, this wick here, and then this bearish engulfing pour it through it on that 4-hour.
Yeah,
And
that
that's
was the Fed pricing. Oh, no,
yeah.
no.
This
Was
was
that Fed
Tuesday.
pricing? Oh, that was
Yeah.
Tuesday. Fed
This is
pricing was,
Tuesday,
yeah, we're on a, is
and
that
this is
4? Okay,
Wednesday.
we're on a 4-hour chart. I
4-hour.
thought it was a 1 hour.
Yeah, yeah. I did the 4-hour because I was like, I was trying to figure out what the heck where we were going today earlier when we were streaming, and then I was like, oh, this is a target, and we got just shy of it. So, sometimes getting just shy of it is complete in context because it's a range. It's not. It is an exact number, but I don't know that's always seen that way in the eyes of traders. So
On
that I
your levels?
yeah,
Um, I've always seen levels as a zone, and the lower the time frame, the tighter the zone, because basically the zone of a support and resistance level is the equation of one ATR. And
yeah,
so as you go longer time frames, you have bigger ATRs, the zone of support and resistance bigger. As you get lower time
yeah,
frames, the zone of support and resistance is smaller. But it's never a finite number. We might say it's a finite number because you have to
right.
talk like that, but you got to realize it's always a zone around that level.
Well, that's what I'm saying. Like the tip of this wick technically is 37.51, right? And the tip of the wick that we just created an hour ago is 737. So that's a difference of 14 points on the NASDAQ, which is really chump change. Like that's a very small difference. And what I have found is if you're heading for a specific target, putting your fill a little bit below that so you make sure you get filled is a strong opportunity to make sure that you can capitalize on most of the move and not be left holding the bag if it rejects ahead of time. And so in this situation, you could be targeting the 751 breakdown level here, but you could expect to fill, I don't know the NASDAQ as well as some of you guys, but maybe 10 to 20 points below is the sweet spot on these larger time frames. I don't know. But definitely, I think we did a lot of context filling today with this bullish engulfing on the 4-hour that took back pretty much this whole like liquidity pocket here of that sinking. So now that we're seeing this loss of momentum, I think that's what's going on is we essentially got to this target, give or take, right? And now we're fading backwards. And we have seen some bears in the market today. There was some steep retracements that kind of, got us into a little bit of trouble earlier. And so for me, I do see a little more downside here, especially on this is the 15-minute. We're officially printing underneath that 9 EMA. We had a nice rollover here at a key level, and now we tend to be marching down here.
By the way, you said that was a 23-point zone?
Yeah, 14.
14, the ATR on that time frame was about 22.
Okay, see within the ATR is where it hit. Interesting. Yeah, I love that. ATR is coming down, which is kind of nice. I mean, it was kind of wild there for a while. We were getting last week.
Yeah, it's a very good indicator of when the volatility is declining. Like, because as you go through an event, whether it's central bank or labor, doesn't matter, you see an expansion of volatility. And as that ATR comes back down to what it was before the volatility, that's when you can determine when the volatility and the pricing is done.
Yeah, so interesting. ES did the same, you guys. I was hunting this high of the morning and my point of control from yesterday all morning on my longs, right? Literally all of them were longs. This I did get in back in here when we tapped this. I got in and I added, and then I
Been above VWAP all day. Like, yeah.
Yeah. I felt good about it. I felt like taking out this high was ES is so tight today. Like this is a very, very tight. We're still within the first 15-minute orb, which is bananas. Like that's such a tight, annoying day. Like this is no wonder. Like if you scraped by green today or was able to like handle it, like that's great, especially for ES trading. I mean, NASDAQ gave at least a directional move once it settled in for a couple hours. ES had, shorts, long, shorts.
I
Long.
haven't liked the ES all day.
No, she's kind of a crabby friend at the moment.
Yeah.
Like even if I didn't snug the stop up into stop, which thank goodness I did, move this last exit was a stop into profit after these two hit targets, because I was aiming for this and it would have lost. Like that's why move your stops too is the rationale that I do, because if it's not giving it fast, it could take it back, which it did give one more push, but it didn't get to my target. It would not have filled me. So, okay. So now what? Did we see any trades? Let's talk about that. So we have 50 minutes left. What's up, Waji? I'm happy to see you. Now we're coming back to VWAP, which is an interesting look on ES. She is the tighter, kind of a little bit more obnoxious one. Also, though, we're under that 90 EMA. It was quite a rollover. So the VWAP is an interesting area of support for me, but we're bearish. So I don't know that.
I think if you do anything in power, I think it's a fade here. I think it's going to be very difficult to fight up above some of the chop up at the top of the market here today.
Yeah.
You're underneath the 5-minute 9 EMA. You're underneath the 15-minute 9 EMA. And if you get underneath, you see that wick low on that current candle, that wick low is
Yeah.
legitimately
Just
the
taking out.
penny on the 30-minute 9 EMA. And
Okay.
so, and you're already
Okay, here we
seeing
go.
the rollover there. And so I do think there's a fade against the trend here. I
Yeah.
wouldn't be too aggressive on position sizing. I think the general market is pretty much done today. I think
Yeah.
the general market is pretty much already done for the weekend, but
Mhm.
like I do think you got to take out the low here.
Yeah, which is a great point because that's essentially a Friday afternoon because tomorrow is Juneteenth. It's a holiday, and so there's just a couple hours of market open in the morning, which is gonna be weird, annoying holiday hour action. So be careful with that. So yeah, this is kind of like Friday afternoon could get kind of obnoxious with just people closing out trades. This would have been, I would be hesitant to short now because we broke down and now we're retesting. This orange line is my IB high, which is kind of, see how it was resistance and then it was hard fall back. And finally, view up here was able to break it on like the
Mhm.
fifth attempt. But now that we're sliding back to it, it could be a little bit of bounce because this is the first real retest after the attempt at the long. So right in here, it could get a little froggy.
I love that call out.
I love that. Literally, I want to say it all the time now. I love it.
You said it's a good one.
I enjoy it. Yeah, she can do whatever she wants. Yay.
Jaja, which one's your favorite memory stock? Is it Micron, SanDisk? Which one? You going with the gold chip with Micron? You going with SanDisk, the silver plate?
Okay.
That's NDK.
Speaking of metal, should we
They're
pay your
both
bill?
fantastic, by the way. I'm hating all things gold right now, because of the dollar. The dollar is putting some pain on gold, and I don't love it. But I will tell you right now, what I will love is a 4100 double bottom on the daily chart. I love that.
Mhm.
So I'm being patient on gold. You know me, I don't short gold, but I do think it's a good short.
Yeah, right now it's fallen.
But I'm writing covered calls. That should tell you everything you need to know about what I think about gold. Gold's just not going to catch a bid against what the dollar's doing. Like if the
Yeah.
dollar's breaking out of a multiple time frame level of resistance, gold's going to get smoked and it's going to get me on 4100 test. But like I'll back up the brick struck at 4100.
Yeah.
Like me and the United States government, we're going to put that support in. I'll tell you that right now.
All
Um,
lies.
but as of right now, I agree with Ace. Gold shorts, they're the ones with real momentum right now. It's either dollar breaking out or gold breaking down. Like the equity market's going to have. I was talking about this during the lab here today, but it's going to have some sensitivity as it's seeing some separation on the sector side of the equation. Whereas you have this one-to-one impact in gold and dollars, and as long as dollars up, gold gets smoked.
Yeah.
So I think the gold shorts have an edge down to 4100.
Dude.
Not
Listen,
on that, like you're not going to catch that on an intraday trend.
yeah, it's too far now.
Yeah,
I'm just
but
looking at it's like, yeah.
that's where I kind of feel like this technical saga has that next first major test is down
Yeah.
around 4100.
We're inside that doji day from like a week ago right here, and this is the low of that doji. So there's like this all is available for the
It's
taking
open
here.
air.
Yeah. Yeah, on the 5-minute, I just don't feel like I could join it now with where we're at because it's like it's
No, I think you'd have to just limit that bad boy at the 9 EMA. Like if you
yeah,
get close to the 9 EMA, I think you can structure it there.
on
Like
the 5 or the 15. What's your
I
favorite?
would do it on the 5 with this much
And
time left in the
yeah,
day,
yeah,
and I'll tell you, in gold futures, you gotta have courage to carry a 15-minute trend in gold futures.
yeah. There's a lot
Like,
of money, Prince.
yeah.
Yeah. Yeah, and it's a good point about the EMAs. Like, if you watch them because when you're really extended, you got to be careful of a retracement. Like recognizing that we're bearish, that's important to know which direction we're going and what sort of momentum you're in. But also recognizing that we're not hugging it. Like right in here is a lower risk short because we're right kind of along that trend.
Yeah.
Down here is a high risk short, even though their direction is very likely correct. But there's just so much room for a retracement, and the market doesn't. I mean, this is a lot of red candles printed in a row on the 5, so of course momentum. However, look at there's green sprinkled in, and we could use a green here. Green sprinkle.
And one of the things that you can do is just look at the visual distance between the candles and the EMA. The
Mhm.
market does not live underneath the candles like that very long without development.
Mhm.
In fact, you go down to the last time we had momentum just earlier in the session, once it got a little bit extended, that 9 EMA caught up and you saw another move to the downside. And so if I were looking to short gold here, I would just be waiting on a pullback to kiss off the 9 EMA. I like literally just market order right there, stop above it. That's the
Mhm.
cheapest risk environment that you'll have on a gold trade is if you can get it right at the 9 EMA, stop loss above the 9 EMA, and you basically say, I'm willing to take that small risk in the case I'm right on the 9, and if I'm right
Mhm.
on the 9, it can work out really, really well.
Yeah, I love this spot. I don't know if we have enough time to get it, but if it can pop, that would be great because this is the breakout. This was the bottom, double bottom here.
Mhm.
We broke it with strength. Now there's an anomaly because there's a large candle here as it just marched downward
With
with some
volume,
strength. Yeah,
with
with
volume too.
this is sick buy selling
Yeah.
volume right here. Yeah,
Wyckoff's like, "Yeah, that's not absorption. Whew, distribution, baby."
yeah,
It looks like it wants to test further.
yeah. And if it came up here, that would be the 90 EMA. That would be very close to trend line. That would be inside that
Mm.
pocket. That would be at the breakout level here. So I'm gonna leave that sell order and see if we get a trigger on that. I like the setup. I don't know. Like I said, we have 44 minutes left in New York session. So it could not happen. We could just kind of walk around down
If it
here.
happens, it's gotta happen in the next 10 minutes.
Yeah. Otherwise, there's no time for it to actually
Mhm.
play out either because you have to get your entry and then you have to get the move.
Well,
So
if it bases, a low base can be a great trade setup, but a low base is gonna take 20 minutes here, and
yeah.
that's just too much time. So your other option is to try to just do momentum conditions on the 2 or the 5, and
Yeah. We're
that's
trailing.
prone to get snapbacks.
Yeah. Yeah.
So I just think you gotta be patient and not chase there.
Yeah. Well, here's this down here. It did tag pretty much right on top of that. And now it's doing the froggy bounce. So maybe this will give us one entry up here for the next leg back down. I would have liked
I
this
would
to
prefer the
actually
gold
fix.
trade there, I'll tell you,
Huh?
but I prefer the gold trade by a country mile.
Yeah, this one is more bullish. Like, it was
Yeah,
bullish most of the morning.
you can make arguments on the Nasdaq that it's gonna be pretty catchy.
Yeah. Yeah, this is a lot of consolidation up here, and for this day to kinda, like, wean down into just dinking around in these upper consolidations, that
Mhm.
absolutely is a day that we've seen before, too. So this could give us, maybe a 2 or 3 5-minute candle print long, honestly, off of here, back up into this levels, and then I doubt it would continue, but it could even try to tag this, and so right here is a place where I wouldn't still be in my short if I was in because this would have been my target for the
Yeah.
bounce. And now that it's bouncing, it's hard to say if it's just going to bounce to 90 EMA or if it's going to do a little more of a push because it has had bullish energy today.
The Nasdaq's outperformed everything today on the
Yeah.
well, it has not outperformed the dollar. The dollar is the number 1 asset today, but the Nasdaq has outperformed the general market itself,
Mhm.
and gold's underperforming. Like, if you had to take one of the trades, gold overextended or try to fade the Nasdaq today, I'd rather do gold.
Yeah. Well, and to be honest, like I was a little irritated when my stop was taken on that last runner, but honestly, I took the trade from like here to here. So I
Well,
mean, with the day's range today,
that
like
trade off VWAP was a fantastic trade.
yeah, yeah, I was layering in this doji. I was like all eyes on because it was
Yeah,
like, gosh, if
like
we get a good
Fed, increased wick, doji, go baby.
I got a lot of my position here. I added on this one, and then I was thinking, I was like, I'd love to hold the power hour, so I added a little bit more. But it was good. But now I'm like, I don't know. This was a good move, and then we lost all momentum here underneath that target
A
from the large trade.
slow rounding top there.
Yeah. If this gives though, it could plop way back down here. It
No,
takes
I see it. It's better than it was, 5 minutes ago, but
yeah,
man, I've been watching this 30-minute battle on the Nasdaq right off that 9 EMA.
yeah.
It's just tick, 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 tick,
Mhm.
trying to figure out what it wants to do with its life here.
Right.
Like, are you gonna pull back to the 30-minute 9 EMA and get a confirmation pivot, or are you gonna break the 30-minute and go to VWAP? Like, that's is a very, fairly interesting multiple time frame conversation here.
Yeah.
Looks like the, 30-minute 9 EMA is winning out so far.
Yeah. I like this pop here. I wonder what it's going to do when it gets up here into the resistances from this morning. If it could give the sell sign, I might take a sell up there. But it's hitting the 90 EMA now, and that was a strong pop with some decent volume here. So I think it could test here-ish. We've got time for that. So This long off of this it was a decent little scalp here, and then we'll see how high it can go, because it could stop here, it could stop here, anywhere in here it could stop. Let's peek on gold again, see if it's doing anything more interesting.
Hesitating.
Yeah. You have a nice buying wick on that last 5 minute. It's the biggest lower end wick on these last two that we've seen. So that.
Well, it's basically starting to develop what you were talking about, kind of getting back up into that 9 EMA.
Yeah.
You're definitely seeing an overextended pivot, though. You know what I mean? Like we're seeing that pivot formation at the low point.
Should I scalp the long?
I wouldn't.
No, I wouldn't either. It's got too much momentum. I guess.
I'm gonna talk you down on that one.
Talk me out.
I don't know if you want to go against a trend that just broke support in an overextended environment, with gold being the worst asset in the class today.
No, I don't. I just
no, I don't think you want to put the low there. No.
No, I don't want to be the knife catcher. I get bloody.
No.
Yeah.
My father told me a long time ago, do not catch that falling knife. He was talking about the literal knife, the utility knife, as he would drop it down from the top of the backhoe, have me catch it. He was, because we were on a construction site. My father was a small business owner in construction. And so he was literally talking about don't catch the falling knife. But in the market, I'm sorry, you're not the Fed. You can't create price action. You got to go with the trend.
Well, in the kitchen, a knife falls, you just back your feet up and let her happen. Like, that's what we need to do. It's a phrase that we all can like see a thing with, because it's a real thing. You want NQ? I know. I get it. Let's see what happens. They're both potentially developing here, but
NQ is above the 5.9, 30 minutes trying to confirm.
I think it could. I think it's going to push just a little bit higher here. I don't know that it's gotten a new high in it for the day today, but she's the strongest of all of them. So it's
definitely testing 10 points up here into 700 or 715, 720. Like, it's going to test there.
This here that I drew on it's like 710-ish, which is on the 15-minute chart. That's the resistance of this morning drawn on the 15-minute chart is like 710. So anywhere, 710, 715 is right here at the base of that rollover from earlier. So I think that's a high likely target for this. And then you could attempt a runner to take out the high, because we talked too about the liquidity at the pivots. And so
we're also talking about 10-point ranges on the NASDAQ.
Yeah.
You know what I mean? Like, just to pull it out to some context here, like, I don't get too excited about 10 points on the ES, let alone 10 points on the NASDAQ.
Yeah.
I'm also not a scalper. So, like, let's get that disclaimer out of the way. But
you get a few contracts on, it'll add up. It'll get you move your account down and move the ball down the court. But these are small moves we're talking about today. Power hour is unique for that. I mean, sometimes we can get on board. Sometimes we can see really good trades at the beginning of power hour. But for this, I was hesitant on the long because it was sinking and I didn't know how far it would go. So now I just kind of want to see on rejection, because I think that could be the last play of the day. Let's see. Oh, gold did roll.
I would be at this point surprised if I made a trade between now and the close.
Yeah, I only really want the ones that we have covered, and I want to be more particular about what I'm engaging in.
I think the flag's the best one of the bunch. I agree with Mary. NASDAQ's the most bullish of the asset classes today.
Yeah.
ES is a choppy. Somebody else tried to find an edge there on the ES today. Gold's the only one that, NASDAQ trend to the top side, gold trend to the downside, but gold is the weakest of the bunch today. NASDAQ's the strongest of the bunch today. Dollar reigns supreme. Dollar is the strongest of them all right now. And as long as we're dealing with dollar up and dollar being the number one asset and strength, you're going to be dealing with some chop in the markets. Like, it's just going to happen. But I definitely would be looking long NASDAQ. I'm not talking on the day trade side, but because I just, like, we got 30 minutes left in the session. Like, I've seen a lot of signs where the market is like telling me they're done for the day. I do think the best trade is a fade, because I don't like the return on the top side here.
Yeah. In fact, if you were long, I would be careful here because it doesn't have to get up to these resistances either. This could be it.
I don't think you can target above 700 right now, personally.
Yeah. Yeah.
Based on technical analysis, John, yes. How do you not see a multiple time frame breakout with confirmation as anything other than expect more higher prices? And so these are levels that have been tested for a year on the dollar. They've held against a lot more things than what we're dealing with right now. And so, yeah, I would say based on technicals, you would certainly expect more upward moving price, which means it'll be a pleasant surprise if we don't get that. But the dollar's also pricing in the most bullish expectation of the Fed yesterday. And so I'm very open to seeing how this looks as we get into next week. But as of right now, you have to be expecting more further dollar pressure.
On the 15-minute chart, we're really retesting this 9 EMA here on NASDAQ. So this will be interesting to see how this 15-minute closes in 4 minutes here.
Gold's trying to pull back.
Yeah.
Gold saw his path when everything, the path on every one of these trades right now is so tight.
Yeah. I agree. It would be a scalp. If we can get something here, it would be a scalp. I love how you teach us about the relationship of the dollar to the equities and the larger stock market, because it's important to kind of weigh all those things. I think a lot of people learned about the VIX. I think that's more commonly taught. I don't think the dollar relationship is as commonly taught with the rooms that I have been in thus far. And so I appreciate that information that you provide.
Well, you don't want to hear my opinion on the VIX then.
Oh, I do actually.
The VIX has been a broken indicator for 15 years.
Tell me more.
I
don't use it so much because
I don't use it at all. I don't think, as a technician who understands how the ES and the NQ function, there's nothing that the VIX ever does to tell me absolutely anything. In fact, I've seen the VIX misprice in volatility more often than not.
It's really kind of lagging, I feel like. Like when it's moving, it's like, yeah, I know, I've been in the move on the other side already. I don't know.
Yeah, I get punched in the face, and then my friend comes up and says, "Hey, you got punched in the face," and I'm like, "Yeah, I kind of feel like I already got punched in the face."
I think that's what bothers me about it.
The VIX to tell me I just got punched in the face. Like, I feel the punch in my face. Like, there's a physical thing with the punch in your face that you can feel, that you don't need your buddy coming up, "Hey, dude, you just got punched in the face." I'm like, yeah, VIX, thanks for the secondary confirmation there. Appreciate it.
Okay. I think that's what always kind of rubbed me the wrong way, because I'm like, I know, because it's
Here's my real opinion. I think Feld technicians use the VIX to try to help other people who don't understand market mechanics understand certain market mechanics that they truly don't understand themselves.
okay. Yeah. Yeah.
I don't think professionals use the VIX.
It's like something to lean on when you don't understand what underlies everything.
No, when somebody comes up to you and they ask you a question on volatility, it's like, "Oh, the VIX is at 30. There you go." I'm like, okay, what does that tell you? Nothing.
Okay.
That tells you the market broke a support. I can clearly see the market broke a support level.
Yeah. Well, they're both kind of doing what we thought. Gold is pulling up a little bit. NASDAQ is pushing up a little bit.
Yes, Jaja. All secondary indicators are used by somebody. RSI is a very traditional indicator used to secondary confirm overextension conditions. Absolutely. RSI divergence is a wonderful leading indicator of potential continuation versus reversal formations. And so, yes, I would say pros, retail, everybody uses or should use RSI. I think RSI is a wonderful indicator. I just don't like the VIX. Like, I think the VIX is very lazy analysis that is always late to the party. I think the VIX is the guy that shows up at the party when it's closing time saying, "Hey, we're here. You guys ready?" It's like, "Oh, thanks."
I like RSI on the slightly larger time frames and at key areas. So when I think there's a pivot, that's when I will turn it on and I will look at it. because it gives me an added confluence sometimes. But I don't leave it on most of my charts most of the time. But if I think we're at a key level and it could be a pivot, then I like to see like retest with some bullish divergence or bearish divergence, you know?
Yeah.
I like.
But can I just say one last thing on the VIX? By the way,
Yes.
I've seen lazy hedge funds use VIX analysis in the options market. I've seen those lazy VIX traders in hedge funds blow up more hedge funds than I've seen on any other form of analysis in the market. They get so lazy against where volatility is. They just sell the volatility, and it's like picking up pennies in front of a freight train. And then the freight train comes, smacks them in the face, and their buddy's like, ha, 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 VIX up. You just got punched in the face. Like I find it to be the most worthless indicator in the market personally. And I'm not trying to offend anybody that loves the VIX. If you love the VIX, good on you. It's a worthless indicator.
All right, I'm gonna give this fade on NASDAQ a shot. It waked up. It waked up on the 15. It rolled over here, broke structure on the 5. I layered in a couple on this pull up. And give it a go.
The 10-year is alpha, the dollar. That's the exact same. Ace, whether you're doing it in the bond market or you're doing it in the currency market, those are both catalysts. Absolutely. If you want to understand if the VIX is going to move, start breaking down bonds and dollars. Understand those two markets, and you'll never have to rely on a lagging indicator called the VIX again.
Mhm.
I'm going to offend VIX guys. I'm not trying to.
I mean, it's good to talk
Yeah,
about
there's
like
something
the
for
underlying conditions.
yeah. By the way, I've had these opinions for a long time on the VIX, and I've had these debates with people on the VIX for a long time. But like, if it helps you understand the market, fantastic. It just doesn't help me.
Yeah.
A low
Give it
base
a
breakdown
little
here.
bit. Yeah, low base on gold. I was just looking at the other screen. Yeah, it tried. It wicked. It's the 90 minutes catching up with these wicks. It's not far here anymore. Like it was above my entry that I moved down. Ah, she's breaking. Well, that one didn't come for us. I felt like NQ did come for me.
Um, my thoughts on Bitcoin, I have none. I don't want to touch Bitcoin right now. I do have thoughts on Ethereum though. Jaw. I personally believe both of them will work fairly similar. But my opinion is on Ethereum. And there's a very specific reason is I believe we are in what's called deep technical value on Ethereum. Ethereum's ETH, if you want to take a look, but I don't believe we're there on Bitcoin. And so I do believe that we're in some deep technical value. I'm looking for reversal analysis, and I'm not looking to day trade it. I'm looking to position trade it off of reversal. So you got on ETHA, and that's the instrument I'm going to use. But on ETHA, you got support between 10 and 11, and you got a major resistance at 14. And so what you would love to see, and I'm just kind of talking off the top of my head here, but visualize it on your chart. What you would love to see is for Ethereum to come down, test that 11 to 12 zone, double bottom at that 11 to 12 zone, and then get back up into 14. That creates that W formation, and then we're talking upward movement price. And so you have scenarios where it goes to 10, Mary. Yeah, it does. The historical support range is anywhere between 1,000 and 1,500. But I do have an opinion on that one, and I don't have a position in it yet. I'm going to be patient. I'm not going to. I don't just pick up the low price guys. I wait for confirmation in these things to give you the edge. But as of right now, I'd love to see a double bottom at support, and I'd love to see it break back up above 14 on ETHA. By the way, that's exactly what we did last year, and it was a beautiful thing. Yeah, Mary, anywhere in that range. Like I'm talking on ETHA, but yeah, anywhere around if you can start picking up Ethereum at a cost basis around 1,100, um, I think it's worthy of a stab. Yeah.
Okay, well, nice wick on that short here. We'll see. We'll see if there's follow through to either side. Got 25 minutes still. Should go a little higher. Let's see what the 15-minute looks like. Ooh, there's a wick on that 15. Let's see. Got 5 minutes left though. I'm gonna give it a little time, see if it wants to retest these wicks here.
Ace, if you're waiting on Tom Lee to save anybody, we're going to be waiting for a long time. Tom Lee's the guy that's in the Titanic that starts getting into the boat, and when the boat's not even filled, he tries to get in the water.
Man, look at this. It's catching up here. It just poked below, and now it's pushing a little bit on gold.
I'd say, in fact, Ace, that's like saying that our boy at OpenAI, Sam Altman, is going to be the savior of all things AI and make the right decisions on the future of AI. I could go on this one for a while, Ace. Oh, don't get me wrong. I like it when Tom Lee's trying to pump my assets, but Tom Lee pumps every asset.
Oh, gold. Okay, go.
It's testing the 9 right now.
Yeah. I remember back when it was way up here. This is an
Oh,
interesting.
that's the thing with the 9. When you get extended, either you're going to base and have that 9 catch up, or you're going to flag into the 9. Like those are the two paths you take. This one is obviously a base, and now once the 9 catches up, it's a matter, can you get back underneath that base? Because in a base, I don't think you know how I was saying, like, if we're going to flag into the 9, I think you could just trade it off the 9.
Yeah.
In a base, I don't think you should do that in a base. I
Yeah.
think you should wait on confirmation on a base.
Yeah. Now we're at the 9, and it's the wicks on the 5. Let's see what the 15-minute looks like. That closes in 3 minutes.
Slight extension, could use a pullback.
Could go a little higher. I don't think I'm going to move my entry down yet. NASDAQ is wonking. I'm going to give it a minute. Still pushing higher to resistance.
You want the Michael Irvin number 888?
Yeah. I know, right? That'd be fun. That'd be a fun number. I don't know. We'll see what happens. NASDAQ's got a roll for me. I know. I love Steve's numbers. When I see him on the chart, I feel like
That's right.
That's the Steve indicator.
That is a Steve
Give
number.
it to me. Give it to me.
I like Steve's numbers.
All right. You watches them for a reason. At this point, we might be getting 666 on my P&L.
Well, you want the devil's number.
We'll see. We'll see how it shakes out here. Let's see what we can get, as long as she's green. No, taking a red day sometimes happens. Earlier I was in red, but turned it around. I mean, I don't want it to go that way. How about we just throw it over 1K? Let's do that. ES is like dropped down and is holding a little bit too. She's pushing up. They're all pushing up here into the close. Well, not all, but gold, ES, and then Q.
Give that 1 second here.
I know. I'm going to see what happens here at 721. 721 to 720.30 is a very interesting level on NASDAQ. Giving back like my house money here. It's irritating.
Gold's got a chance to get to 38 here.
Yeah. I think I'm gonna leave it where it is, which is I wonder 38.
I meant 36. Excuse me.
Okay. Curious if we'll tag this trend line and reject at this double bottom here. I'm gonna let my limit sell sit here at 33. There it goes. And then this one I'm gonna put a stop on because she's flying here. Just above that bullish fall. Right there.
Yeah, get 36 if you can. 36 is the 15-minute 90 EMA.
Yeah, that gives it 38, and that's that bullish engulfing. It's only 112 feet. It was bearish all day. This retested the trend line it created and the 15-minute moving average. The trend line rejection and that low here is what I'm trading. Let's see if we can go back for the low here for the end of the day. NASDAQ is wicking off of that 25 area. She's still pushing strong though. I know. She's taking her up. Take it up. You guys take it up. I'm gonna see what happens here. We're pushing up into resistance, which I don't like longing into resistance. I'm gonna see if she'll still roll after taking out that liquidity. In fact, I might monkey around a little bit and add that liquidity. See what happens.
Does the NASDAQ want to run? Is it going to just hold here at resistance?
I don't know. I kind of want to see if it'll take out this top here and then fall.
Well, the wick is the same wicks as all those ones to the left of the chart.
She's pushing with strength right now.
NASDAQ, like we talked about, number one asset post Fed's dollar. Number two is NASDAQ.
Yeah. This gold is rejecting off that trend line and that lower bottom touch. That's cute. I like that. Go.
Josie, if it breaks out of 70, if it breaks out of the top of that wick at 36, you better start thinking higher than 45, my friend.
I don't know. I'm going to see what happens here in resistance. I'm going to play a double advocate.
If it breaks out and you're only expecting a 10-point move on the NASDAQ, I don't like that breakout.
We're at the end of the day, though. Like, I don't know.
Yeah, there's 17 minutes. NASDAQ ticks 10 points.
Throw it and then give us a wick. That's what I'm down for.
I'm not saying you can't target there. I'm just saying, like, you have the ability. Once you break out, you have the ability to go higher, obviously.
I'm playing with my house money here. Not that I recommend that. Position tomorrow. Yeah, tomorrow has a couple hours in the morning to open. There's the top there. Oof. I gotta lock this down at some point. She's going for that high that we talked about, 751. Hmm, 777, Jaja.
Yeah, it may do a lot of things.
That was my 740. Oh, this is gonna get ugly, man. See what happens with the target. This one I gotta lock it down. Let's give back a moment profits here. We'll see. 751 was my morning target. All morning, it just kissed it.
Well done, Josie.
Yeah. She's running. Hope somebody's in this and making money.
It's a good move on the NASDAQ right now.
God dang. All right, let's start shaking it.
I think you're currently at a very important level on the NASDAQ.
Yeah.
Just for this trade, but
Yeah. This one too is like this one's doing. Man, how did this one hand? God dang it. I'm messing around playing with this house money and I didn't pay attention. 745. I'm gonna wait and see if we can get a wick on this day. Right at this point. Man, I'm so aggressive when I stream. What's happening in my life?
yeah, you don't get to beat Micron.
Ugh.
Micron is currently my number 3 stock on my AI power rankings
Yeah, I know. All right, I'm shutting it down.
because you cannot get higher than Google and Nvidia. It doesn't happen for me, and it won't happen for me. There's nothing Micron can do to get a higher ranking than Nvidia and Google. Oh yeah, it has nothing to do with my like they're number 3 out of 300. Like it's a very I have a strong opinion on Micron. It's just that they're a vertical juggernaut, and to beat Nvidia and to beat Google, you have to be horizontal juggernauts. And Micron's a vertical juggernaut. So it's more about vertical is they specialize in one area of the AI trade, whereas companies like Nvidia and Google and other Mag 7 components have their greedy little fingers in every aspect of the supply chain. And so the largest companies in the world are literally horizontal built companies with different verticals, whereas Micron is specializes in one area of it. And so like they're number 3, that's not a negative thing. Number 3 on my AI Gold Rush is it's very high ranking, obviously. I'm just saying you don't get to Google NVIDIA fundamentally than as you do Micron because my lists are not just technical lists. I don't build my long-term analysis based on short-term momentum. You have to take into account fundamental analysis in that, and so you just don't beat Google and NVIDIA for me on anything. And that's a good way to put it, Jaja. That is a good way to put it. Like ASML, you can make a very compelling argument with ASML versus Micron on the vertical importance, for example. But until somebody throws NVIDIA on GPUs, they're king, queen, and country of the AI trade. Oh, there's that sell coming in.
Thank you. Thank you. Go, please.
There's that sell.
Okay. Okay. Drop it like it's hot. Needed a wick on this candle. I de-risked a little. Now I'm just gonna let it handle it.
Balance has helped.
Short.
Yeah, she shorted the top, Mary.
Yeah. Let's start taking off some of that.
Yeah, I think that's just a move back down to support. I'd take it off.
Yeah. All right.
It was a good trade, though.
Thank you. The bad trade was the long, but I didn't think she was going to go that high. This gold is rebounding as well here with this small position. I just trade contacts and I couldn't hold the long into resistance. And so then when I was long, I de-risked a little bit and then I added a little at the very top there. And then I held through imbalances because of the context of like, it was such a key level in the larger time frames. We're coming to the end of the day. There's a wick. The short makes a lot of sense. So one of those things where you got to like hold on to your butt cheeks a little bit. I appreciate Jaja and Ace and Matt holding it down so I could clench for a second while on camera. It's fine.
Oh, you're fine. You're fine.
Meh. You know what? Trading, if you don't risk, I mean, you gotta, there's a little, it's the game. You gotta be able to have some stamina to withhold for a second. And, you know, is what she is. Now we'll see what happens with this gold trade. I'm chilling NASDAQ because that was enough. That was enough clenching for NASDAQ for one day. You guys know I only started trading NASDAQ a couple months ago. So you guys gotta, all you NASDAQ traders, talk to me all the time. It'd be great. I've been Dow Jones, ES. I started with crude years ago. NASDAQ was not one of mine for a long time. Okay.
I cannot believe somebody recommended you start with crude oil.
The first company I started learning with was all over the dang place. Let me tell you.
That's so funny to me that somebody's like, listen, we're going to start you as a new futures trader with crude oil.
Oh yeah, they would trade it. Yeah,
like, that's just crazy to me. Yeah. It's just crazy.
Woo.
Long term. Just those three.
I'll pull them up, but I'm in my futures.
That's tough for me. Just those three on 10K, 532. You can pick which one you want the 5 in. I think, Ace, you know my answer on that one.
29.
Yeah. Because you don't need as much in Micron because of the growth. Micron could easily get to the point where it actually outproduces. I am Buffett influenced, my friend.
Buffett done some good work in his life.
Listen, anybody that says anything negative about Warren Buffett, those are fighting words on my part. Like, the man has influenced me more in how I see fundamental analysis than anything, and cash flow than anything. Obviously, Buffett is not a day trader. Buffett is not a swing trader. Buffett is an expert on the cash flow side of the equation, compound, you name it.
Fun fact, Wadji and I started in the same trading community that was like such a cluster of just trying to get monthly subscriptions out of as many people as possible. And you needing them.
Horror stories.
Yeah. He's like, oh, we learned some things, but we survived.
I was quite surprised in some of the things that they would put you guys in. The number one thing that shocked me was telling you guys to get out of long-term investments. Like,
yeah,
that is just illogical, irrational, and terrible advice.
Yeah.
Why
Yeah,
would you
I
get
think
out of
that's
a long-term investment when you could use that long-term investment to write covered calls and cash flow instead? Like, it makes no sense.
yeah, they were not trying to help us become profitable.
No, no, they were not. Not with the level of recommendations that I no.
Yeah.
Um, Same question for $100, Justin. That's funny.
Bring it down, bring it down. Let's see what happened with my NASDAQ. Oh, that was a lucky exit. Those imbalances really got me out.
Um, well, Jay, I don't think they were investors in long term, and so it's easy to tell you not to invest in the long term when they don't.
Mhm.
Like, to me, if you don't have your long term dialed in, what are we talking about in the short term? Like, what road are you taking to get to where you want to go if you don't have that long term dialed in?
Yeah, what's your plan?
There's a lot of roads to success, and if you build one and you stay on it, you have a tendency to get there.
Mhm.
5, 3, and 2? Yeah. If you wanted to elevate the growth side of it, you're definitely allocating more in Micron. Absolutely. 100%. That was
Okay.
safe. So if I wanted to design a portfolio max growth, yeah, Micron would be one. Yeah. Like, I don't see how they fix the supply side of the Micron problem or the memory problem in general. Like, memory is gonna be an issue for years. Obviously, Micron and SanDisk and the memory chips and memory stocks will go up and down, but if you're looking to maximize growth there, yeah. If you're looking to maybe do a little bit more on the cash flow side, I like NVIDIA and Google a little bit more, but I could definitely see, the pro-growth Micron allocation. Who I would replace them with? If I had to remove, let's say if you had made me pick out of Google and NVIDIA, I would have to replace Google. NVIDIA is my one. So, and I got questions on the TPUs and whether or not TPUs can really get in and do anything on the GPU domination that NVIDIA has. That held back NVIDIA for a while. NVIDIA's not you're not getting an edge on NVIDIA anymore, by the way. Like, it's like everybody knows the NVIDIA story. And so I would say NVIDIA over Google. And if I had to say off the top of my head, which one would I replace them with? And I wanted growth. Um, you might be shocked to hear this. I might choose Hewlett Packard, HPE.
Hmm.
Um, they're they're the 24th company on my list, but they had the second best earnings report out of the entire sector last quarter. Well, so did their earnings report last quarter. I would take Hewlett Packard in a heartbeat over Microsoft. Um, but I mean, when you increase guidance by 50% and you beat revenue by 40% and you beat your EPS handle by 40%, um, I'm sorry, they're gonna get on your radar very quickly. But ServiceNow, I have a strong opinion on ServiceNow as well. So there might be some software I might replace it with, but it's tough to beat those 3 companies. Oh, I'm talking fundamentally though, Joshi. I'm not talking from a trader's perspective. That's a vastly different conversation. The ultimate question was not what level do I want to take a stab on a swing trade at. The question was if you were to design a portfolio and you were going to allocate into 3 stocks long term, what would it be? And so that was the question. Levels aren't part of the equation. And I don't think you need to have a level get tested to start building a position on an investment either. Ooh, now I'm interested, Ace. Now I got to go check it out. Hold on.
Yeah, I'm thinking. These are the best conversations. I'm just here watching a little candles print. Seeing if she can retest its breakout. Oh no. Special kind of power hour. What's kind of bugging?
By the way, we haven't talked about Taiwan Semiconductor, but they're up there. I love
They've
Taiwan.
been growing so nicely for the last like 5 years. Right, more than that.
They've been growing so nicely for 30 years.
Since they opened.
Yeah.
Good industry.
All right, I want to change my answer, Ace. It wouldn't be Hewlett. Horizon 5 to 10 years, Lam Research, LRCX. So give me my Micron memory, give me my Google GPU, and give me my Lam Research semiconductor equipment company. That's the three. Yeah, that's the three-headed wall. You have an equipment company, you have a memory chip, you have a GPU company.
Nice. Balance it out. Getting all the indices.
Why would you target as an investor? Like, and I'm truly wondering why you would even put stop losses as an investor. Like, why would you want to get stopped out of an investment? Like, I'm trying to understand that. If you're putting stop losses and targeting, it's not an investment. It's a position trade. Maybe that's what you're talking about. I don't know, but yeah, in position trading, you do stop losses and targeting mechanics and position size rules and all of that. Investors, I don't know. I kind of like adding more stock in a downtrend personally.
Yeah, building.
I love dollar cost averaging. I love downtrends as on the investor side. Absolutely love them. I love writing covered calls in downtrends. I love taking the cash flow compounding to dollar cost average to the downside. There's something that happens when you get zero cost on an investor side of the equation, team. Like if you haven't felt that in your life, work towards it. It's a fantastic feeling.
Did the market close? Is it after 1? Whoa, look at this time.
Yeah, we've been after one for a few minutes here.
Oh my gosh.
We're having a great conversation though. I love that conversation.
I didn't seem like it got some whipping end of the market close.
All right, you want to send us out?
Yeah, today was a weird day for me, and I am thankful to be green and that the market is closed, and I'm going to reset and get outside and enjoy this beautiful summer afternoon, and I wish that for all of us. So stay profitable and have a great rest of your day. Tomorrow is the holiday, so take it easy on that. There is maybe some wonky, obnoxious price action in the morning, and then it's a long weekend. So I hope everyone gets out and enjoys that.
You guys have a wonderful, wonderful weekend, team. Stay happy, stay profitable, stay fantastic, and we'll be back. I think are we doing some streaming tomorrow?
I'm not sure.
No, I'm not. I know you're not, but
yeah.
But Becky and I will be back same time on Monday. Team, you have a wonderful weekend, and we'll see you on Monday.